Let me be very clear about what happened in the last 48 hours in global financial markets, because what you are seeing is not a currency fluctuation. It is not a temporary shift in Saudi monetary policy. It is not a disagreement over oil prices that can be resolved through diplomatic channels. What it is the operational beginning of the end of dollar hegemony as we have known it since 1971, and the implications of what the Kingdom of Saudi Arabia just did will reshape global power dynamics in ways that most Americans, including most people in positions of authority in Washington, do not yet comprehend. Having been inside the national security apparatus of the United States government, having sat in meetings where the relationship between American military commitments and Saudi financial cooperation was discussed with complete frankness, I can tell you with absolute certainty that the decision by Riyadh to move $800 billion out of dollar-denominated assets in 48 hours was not impulsive. It was not reactive. It was the execution of a strategy that has been carefully prepared, quietly coordinated with other major economies, and designed to achieve exactly what it is achieving, which is the demonstration that the United States dollar's status as the world's reserve currency is not a law of nature. It is a political arrangement, and political arrangements end when the parties maintaining them decide the costs exceed the benefits. Stay with me because by the end of this analysis, you will understand something that the financial press cannot say and that Washington does not want to acknowledge, which is that the petrodollar system that has funded American deficits, underwritten American military supremacy, and made American sanctions the ultimate economic weapon has just entered its terminal phase. And what comes next will be a world where American economic leverage is a fraction of what we have taken for granted for the last 50 years. $800 billion. That number represents approximately 35% of Saudi Arabia's total foreign reserves. It was moved out of U.S. Treasury bonds, out of dollar-denominated securities, and into a diversified basket consisting of Chinese yuan, European euros, gold, and strategic commodity positions in 48 hours. The speed and scale of the move was designed to send a specific signal. This is not a negotiation, this is a decision. The kingdom did not call the Treasury Department to discuss terms. They did not send advance warning through diplomatic channels. They simply executed sell orders across global markets in a coordinated fashion that was clearly planned well in advance. The fact that Chinese state banks were the primary counterparties purchasing the dollar assets that Saudi Arabia was liquidating tells you everything you need to know about whose system Riyadh has decided to align with going forward. This was not just a Saudi decision, it was a Chinese-Saudi coordinated action, and the coordination implies a level of strategic planning that goes far beyond a single financial transaction. But if you think this story is simply about Saudi Arabia diversifying its reserves, you are missing the deeper and far more dangerous reality. Because what the kingdom just did is terminate the petrodollar agreement that has been the foundation of American financial dominance since 1974. That agreement, which was never a formal treaty but rather an understanding reached between Henry Kissinger and the Saudi royal family, was simple. Saudi Arabia would price oil exclusively in dollars and would recycle its oil revenues into U.S. financial markets. And in exchange, the United States would provide security guarantees, weapons, and diplomatic support that would keep the House of Saud in power regardless of what domestic or regional challenges emerged. That arrangement has been the hidden architecture underneath American economic supremacy for 5 decades. It is what allowed the United States to run unlimited deficits without triggering currency collapse. It is what gave American sanctions their bite, because any country cut off from the dollar system was also cut off from the ability to purchase oil on global markets. It is what enabled the Federal Reserve to print trillions of dollars without producing hyperinflation, because those dollars were absorbed globally through the necessity of holding dollars to purchase energy. And as of 48 hours ago, that arrangement is over. Most people stop here, and that is exactly why they miss what I am about to explain next. Because the question is not whether Saudi Arabia has the right to diversify its reserves, the question is why they chose to do it now, in a manner designed for maximum disruption, and what that choice reveals about the strategic calculation in Riyadh. Having watched how the Saudis operate, having understood the way they think about their security relationship with the United States, I can tell you that this was not a decision made because oil prices are low or because Mohammed bin Salman wants more geopolitical flexibility. This was a decision made because the kingdom has concluded that the United States is no longer a reliable security partner, that American military commitments in the Middle East are declining regardless of what promises Washington makes, and that the future of Saudi security lies in accommodation with China and strategic independence from a Washington establishment that the Saudis believe has become paralyzed by domestic dysfunction and incapable of coherent foreign policy. The precipitating factor was not economic. It was the American abandonment of the Kurds in Syria in 2019, the chaotic withdrawal from Afghanistan in 2021, the failure to respond meaningfully when Iranian drones struck Saudi oil facilities in 2019, and the growing bipartisan consensus in Washington that the United States should reduce its commitments in the Middle East. Every single one of those events told Riyadh the same thing. The security guarantee that justified accepting dollar dominance is eroding, and when that guarantee fully collapses, Saudi Arabia will be left holding trillions in assets denominated in a currency issued by a country that is no longer willing or able to provide the protection that made those assets valuable in the first place. The economic consequences for the United States are difficult to overstate. $800 billion liquidated in 48 hours represents the single largest capital outflow from dollar assets in history. The immediate effect was a 7% decline in Treasury bond prices and a corresponding spike in yields, which means the cost of servicing American debt just increased significantly. But the secondary effects are far more consequential. Every other oil-producing nation is watching what Saudi Arabia just did and conducting the same calculation. If the kingdom, which has been the anchor of the petrodollar system, has decided that diversification away from dollar dependence is necessary, then there is no reason for the UAE, Kuwait, Qatar, or any other oil exporter to maintain disproportionate dollar exposure. The initial move by Saudi Arabia gives permission to every other sovereign wealth fund and central bank to follow suit without being accused of precipitating a crisis, which means the $800 billion outflow in the last 48 hours is likely just the beginning of a broader reallocation away from dollar assets that will unfold over the next 6 to 12 months. What comes next is where things take a serious turn, because the collapse of the petrodollar system does not just mean higher borrowing costs for the U.S. government. It means a fundamental realignment of global economic power. For the last 50 years, the United States has been able to sanction countries like Iran, Russia, Venezuela, and North Korea with devastating effectiveness because those sanctions meant exclusion from the dollar system, which in turn meant an inability to participate in global energy markets or international trade. That leverage disappears the moment there is a functioning alternative. And what Saudi Arabia's move signals is that China has successfully built that alternative. The currency swap agreements between China and dozens of countries, the establishment of yuan-denominated oil futures contracts in Shanghai, the expansion of the cross-border interbank payment system that allows countries to conduct trade without touching the dollar-based SWIFT network. All of those initiatives that Western analysts dismissed as marginal or symbolic have reached the point where they constitute a viable alternative to dollar dominance. And the Saudi move is the signal that this alternative is now operational at scale. Now, I want to address the counter-argument because I never want you to simply take my analysis and accept it uncritically. The counter-argument goes like this. The dollar remains the world's reserve currency because there is no viable alternative. The euro is too fragmented politically. The yuan is not fully convertible. Gold is too volatile. Saudi Arabia can make symbolic moves, but when push comes to shove, global trade will continue to be denominated in dollars because that is what provides the deepest markets and the most liquidity. The petrodollar is not ending, it is adjusting, and this will blow over once the Saudis realize that there is no realistic alternative to dollar-based finance. That is the argument you will hear from people who want to believe that American financial dominance is permanent and that structural changes in the global economy can be wished away through force of habit. And I am telling you that argument is wrong. It is wrong because it assumes that the alternatives must be perfect to be viable. They do not have to be perfect, they only have to be good enough. And a system where oil can be purchased in yuan, where trade can be conducted through alternative payment systems, where reserves can be held in a diversified basket rather than concentrated in dollars, that system is good enough for countries that want to reduce their vulnerability to American sanctions and their exposure to American fiscal dysfunction. Stay with me because this next part changes everything. The strategic dimension of what Saudi Arabia just did extends beyond economics into the military and diplomatic realignment of the Middle East. For 75 years, the cornerstone of American influence in the region has been the relationship with Saudi Arabia. That relationship was not sentimental, it was transactional. The Saudis got security, the Americans got oil priced in dollars, and Saudi financial flows supporting American markets. But that transaction has been unraveling for years. The shale revolution made the United States a net energy exporter, which reduced Washington's direct dependence on Saudi oil. The rise of renewable energy and the political pressure to transition away from fossil fuels made long-term commitments to Saudi security politically difficult. And the Saudi leadership, particularly Mohammed bin Salman, concluded that American protection was becoming conditional, unreliable, and increasingly tied to domestic political calculations in Washington that the kingdom cannot control. The decision to move $800 billion out of dollar assets is the financial manifestation of a broader strategic realignment, where Saudi Arabia shifts from exclusive dependence on the United States to a hedging strategy that includes China, Russia, and regional accommodation with Iran. That realignment is what the Abraham Accords were supposed to prevent, and the fact that it is happening anyway tells you how thoroughly American strategy in the Middle East has failed. The implications for American power projection globally are stark. The ability to run persistent trade deficits, to finance military operations through borrowed money, to impose sanctions that reshape the behavior of adversarial regimes, all of those capabilities have depended on other countries' willingness to hold dollars and to accept dollars as the medium of international exchange. Take that willingness away, and the United States faces a choice between massive fiscal austerity, which means cuts to military spending and entitlement programs, or continued deficit spending that produces inflation and currency depreciation. Neither option is politically viable, which means Washington will likely attempt to continue the policies that have depended on dollar dominance, even as the structural conditions that enabled those policies erode. That is how empires decline, not through dramatic military defeats, but through the slow exhaustion of the financial mechanisms that allowed them to project power beyond their actual resource base. But if you thought that was the full picture, it is not. Because the most dangerous element of what happened in the last 48 hours is not the economic consequences for the United States, it is the signal that has been sent to every other country that has been considering diversification away from dollar dependence. When Saudi Arabia, the most conservative, the most cautious, the most deeply embedded partner in the American-led financial system, decides that the risks of continued dollar exposure outweigh the benefits, every other finance ministry and central bank in the world takes note. The moves that follow will not be as dramatic or as coordinated, but they will be relentless. A few billion here, a few billion there, sovereign wealth funds quietly reallocating, central banks diversifying reserves, trade agreements being redenominated in local currencies. Each individual action is small enough to avoid triggering panic, but the cumulative effect over 12 to 24 months will be a global financial system that looks fundamentally different from the one that has existed since 1971. And the United States, which has structured its entire economy and its entire military posture around the assumption of unlimited access to cheap credit provided by foreigners willing to hold dollars, will discover that the world no longer works that way. The historical parallel that keeps coming to my mind is the period between 1914 and 1945, when British financial dominance, which had structured the global economy for a century, collapsed and was replaced by American dominance. That transition was not smooth. It involved 2 world wars, a global depression, and decades of instability before a new system stabilized. The difference is that Britain's decline was visible and acknowledged, which allowed for some degree of managed transition. What is happening now is a decline that Washington refuses to acknowledge, which means there will be no managed transition, only a series of crises that force adaptations that should have been made proactively. The Saudi move is the first of those crises. It will not be the last, and each crisis will reveal more starkly that the assumptions governing American economic policy, American foreign policy, and American military strategy are built on foundations that no longer exist. The decisions being made in the next 30 days will determine whether the United States attempts to adapt to this new reality or whether we double down on the assumptions that are now being proven false. I have been waiting for Washington to find the realism necessary to navigate this transition for years, and I am not optimistic. because accepting what Saudi Arabia just did means accepting that American financial dominance is ending. It means accepting that the sanctions that have been the centerpiece of American foreign policy for the last 20 years will become progressively less effective. It means accepting that military commitments will need to be scaled back because the financial capacity to sustain those commitments is eroding. And those are conclusions that the political establishment, that the defense community, that the American public are not prepared to accept, which means we will likely continue pretending that dollar dominance is secure while the evidence that it is not accumulates until it can no longer be ignored. If this analysis has helped you understand what the Saudi move actually means beyond the financial headlines, then share it. Share it with anyone who needs to understand that what happened in the last 48 hours was not a transaction. It was a strategic inflection point. Subscribe if you are not already, because the people who are going to navigate what comes next successfully are the ones who understand that the world is changing in ways that the institutional narrative cannot acknowledge. Leave your thoughts below. Tell me, do you believe Washington will adapt to the end of petrodollar dominance, or will we continue operating under assumptions that our adversaries and even our supposed allies have already abandoned? I read everything you write, and these conversations matter because the decisions being made in the next months will determine whether the United States manages this transition or is overwhelmed by it. Stay informed. Stay clear-eyed, because the economic order that has structured the world for 50 years is ending, and understanding how it ends is essential for anyone who wants to understand what comes next.